Have you ever spat into a tube to check if you're actually Irish? If yes, 23andMe has some bad news for you. The company you trusted with the most personal data that exists on Earth just went bankrupt. And after the California Attorney General told everyone to delete their accounts immediately, they auctioned your DNA anyway. 15 million people's genetic information was sold in a bankruptcy court for $305 million. So how does a $6 billion Silicon Valley darling end up selling your most intimate secrets to the highest bidder? Let's find out. "23andMe didn't start in a boardroom. It started with a genuinely good idea from someone who was genuinely angry at the right things. Anne Wojcicki grew up on the Stanford campus, daughter of a physics professor, sister of the woman who would eventually run YouTube. She went to Yale, studied biology, then spent a decade on Wall Street as a healthcare investment analyst. And what she saw there frustrated her deeply. An entire industry built around treating sick people, not preventing illness. Every dollar flowing toward disease management, nothing toward keeping people healthy in the first place. She wanted to flip that, give people direct access to their own biology. Not through a doctor, not through an insurance company, just you, your DNA, and the truth. In 2006, she co-founded 23andMe with two partners in Mountain View, California. The name comes from the 23 pairs of chromosomes in a human cell. In 2007, they launched their first product, a saliva-based DNA test kit, priced at $999. You spit into a tube, mail it in, and a few weeks later, you know things about yourself that your grandparents could never have imagined. Your ancestry breakdown, your genetic health risks, whether you carry markers for Parkinson's, Alzheimer's, or certain cancers. Time magazine named it Invention of the Year in 2008. That's not a small thing. That's the kind of cultural validation that tells you you've touched something real. Wojcicki wasn't just building a product. She genuinely believed she was building a new model for human health. One where information flows directly to the person it belongs to, without a gatekeeper taking a cut. It was idealistic, it was ambitious, and for a while, it worked. The price dropped. First to $299, then to $199, then $99. Suddenly, it wasn't a luxury. It was an impulse buy. And millions of people, health conscious and slightly obsessed with ancestry, started spitting into tubes. At $99, 23andMe became a cultural phenomenon, not a medical product, a conversation starter. Celebrities started taking the test on camera. Oprah talked about it. Lizzo showed up to a Halloween party dressed as the DNA kit. Eddie Murphy did a sketch about it on Saturday Night Live. This wasn't marketing. This was something rarer and more valuable. A product people genuinely wanted to talk about. By 2018, 23andMe had 5 million customers. 5 million people who had voluntarily handed over their most intimate biological data. And Wojcicki understood something that most people hadn't figured out yet. The kit wasn't the product, the database was. That year, pharmaceutical giant GlaxoSmithKline came knocking. The deal they signed was staggering. GSK invested $300 million in 23andMe in exchange for exclusive access to their entire genetic database for drug development. Think about what that means. A company the size of GSK, one of the largest pharmaceutical businesses on the planet, valued 23andMe's data so highly that they paid $300 million just to get first access to it. Suddenly, this wasn't a $99 spit test company. This was a biotech data platform sitting on one of the most valuable data sets in the history of medicine. Wall Street heard the word data and lost its mind completely. The narrative shifted overnight. 23andMe wasn't selling DNA kits anymore. It was building the future of drug discovery. It was going to identify genetic targets that no pharmaceutical company could find on its own. It was going to change medicine, and more importantly for investors, it was going to be worth a lot of money. The hype machine was running. And then came 2021. In June of that year, 23andMe went public through a merger with a SPAC backed by Richard Branson and Virgin Group, raising $592 million. The stock jumped 35% on its first day of trading. At its peak, the market valued the company at $6 billion. $6 billion for a company that had never turned a profit. Not once. Not even close. But when the story is right, Wall Street doesn't need profits. It needs a vision. And Wojcicki had spent 15 years selling a very compelling one. Here's the problem nobody wanted to say out loud. The business model had a fundamental flaw baked into its DNA. You buy the kit once, that's it. There's no reason to come back. You've already learned you're 34% Irish, 12% Scandinavian, and apparently at moderate risk for male pattern baldness. What exactly are you buying the second time? 23andMe knew this. They tried to fix it with a $29 per year subscription service. But subscriptions work when there's something new to consume every month. Genetic data doesn't change. You don't wake up on Tuesday with different chromosomes than you had on Monday. The subscription never got traction the way they needed it to. Then came the $400 million decision that should have alarmed every investor in the room. 3 months after going public, 3 months after pocketing $592 million from the SPAC deal, 23andMe spent $400 million acquiring a telehealth company called Lemonade Health. The idea was to connect genetic insights with actual clinical care. Genomic testing meets your doctor. It sounded logical. But $400 million is an enormous bet for a company that had never made money, and Lemonade never became the engine Wojcicki promised it would be. Meanwhile, the GSK partnership, the $300 million deal that had validated everything, was quietly deteriorating. GSK and 23andMe worked together for 5 years. They identified more than 50 therapeutic programs. They ran clinical trials, and at the end of it all, they produced 0 commercial drugs, not one. In July 2023, the partnership ended. GSK walked away and signed a much smaller, non-exclusive data licensing deal worth $20 million. They had paid $300 million for exclusive access. They renewed for $20 million. The math on that tells you everything about what they found. The drug development dream was fading, and the consumer side wasn't doing much better. DNA kit sales had actually started declining in 2019. The ancestry testing craze had peaked. The people who wanted to know they were Irish had already found out. New customers were getting harder and harder to acquire. In fiscal 2024, 23andMe reported a $680 million operating loss on just $220 million in revenue. They were spending $3 for every dollar they made. The stock had fallen from $17 a share to trading as a penny stock. Wojcicki tried to take the company private, first at $2.53 a share, then at 40 cents a share. The board rejected both offers. Then, in September 2024, all 7 independent board members resigned on the same day. That's not a disagreement, that's a statement. October 2023, hackers broke into 23andMe's systems through a technique called credential stuffing, essentially trying username and password combinations stolen from other data breaches until they found accounts where people had reused the same password. Once inside, they accessed a feature called DNA Relatives, which allowed users to compare ancestry information with other customers. And through that one feature, they were able to harvest the genetic data of 6.9 million people. Not just names and emails, DNA ancestry data, health predispositions. The hackers specifically targeted customers of Ashkenazi Jewish and Chinese heritage, and the stolen data appeared for sale on the dark web almost immediately. Then, 23andMe made things dramatically worse. They waited 5 months to disclose the full scope of the breach, and when the story broke publicly, the company's response was breathtaking in its arrogance. They blamed users. In a letter to affected customers threatening legal action, they argued that users who had reused passwords were themselves responsible for what happened. The company that had built its entire brand on trust, on being the safe place to put your most sensitive biological data, responded to the largest breach in its history by pointing the finger at the people it had failed. The backlash was immediate and devastating. A class action lawsuit followed. 23andMe eventually settled for $30 million, but no settlement fixes the reputational damage of telling your customers that their DNA being stolen was their own fault. From that point, the collapse accelerated. November 2024, 23andMe laid off 40% of its remaining workforce and shut down its entire therapeutics division. The drug development ambitions that had justified the $6 billion valuation were gone. The GSK partnership was gone. The stock was at $0.04 per share. The company was worth less than $30 million, a company that 4 years earlier had been valued at $6 billion. March 23, 2025. 23andMe filed for Chapter 11 bankruptcy. Wojcicki resigned as CEO the same day, announcing she would remain on the board and participate as an independent bidder in the bankruptcy auction. The company she had founded, run for 19 years, and driven into the ground, was now being auctioned off to whoever wanted it. What followed was one of the stranger corporate spectacles in recent memory. The auction started at $50 million. Regeneron Pharmaceuticals, one of the largest biotech companies in the world, bid $256 million. Then, Wojcicki's newly formed nonprofit, TTAM Research Institute, came in at $305 million and won. The founder, who had presided over one of the most spectacular collapses in Silicon Valley history, bought back her own company's remains for $305 million. At the same time, the California Attorney General was publicly urging all 15 million customers to delete their data immediately. Congress launched an investigation. The Pentagon, it later emerged, had quietly warned military personnel years earlier that consumer DNA kits posed a national security risk. Nobody had listened then. Nobody was laughing now. When you build a business on trust, losing it isn't a setback. It's the whole business going with it. 23andMe is still operating under new ownership. Whether Wojcicki can rebuild what she burned down is a story that's still being written. If you are curious about the next chapter, subscribe.